Welcome to today's podcast. And today I got a special guest with me, as always. Phenomenal trader, investor, but really a great person on information and how people can do different things, just to upgrade or, make their lifestyle a little bit better. Merlin Rothfeld on the show today. Merlin, how are you doing today?
Thanks, Josh. Thanks for having me back on.
Yeah, I know it's tough, and I know you have a busy schedule, but I'm glad you took some time here today. With your live show coming up a little bit later. But I want to dive straight into today's topic. There's really a wealth gap in America, right? And a lot of people are struggling with building wealth. And I know you have a lot of different content, and you just have a lot of different tools on how people can start building wealth, but also maintain that through their lives. Just kind of explain some different steps people can take to build wealth in these days.
Yeah, I think build wealth is like the politically correct term. It's like, who wants to get rich? Do you want to get rich or do you not want to get rich? To me, it's a real simple question. And, of course, we got to be careful how we position things. But the bottom line is if you want to be wealthy, if you want to increase your wealth, or you want to just be filthy rich, dripping money, that is all a result of your actions and your choices. And of course, we can listen to a lot of the other famous podcasters out there, and they all kind of say the same basic things. But I think what they do is a lot of times they dance around the issue, and they don't really give you the simple, basic, bare bones strategy for how to achieve that. So I will give it to you here. It's 3 simple things. And I would encourage everybody that's listening right now, I want you to pull out a piece of paper, an 8x11 white blank piece of paper, and I want you to break it into 3 columns. In the first column on the top of that, I want you to write the word income. Second one, I want you to write expenses. And on the third, I want you to write debt. At the bottom, just make a little square somewhere that just says total. Now, your whole goal is to formulate these 3 factors so that you can now start creating wealth and getting rich. And bottom line is, if that number at the very bottom that says total is a negative number, you will never be rich unless you win the lotto. It'll be complete fluke for you to get wealthy or get rich. So the basic formula is this. You take all your income, whatever sources that may be. Could be royalties, could be, your W-2s, you might be a separate contractor, whatever. You're mowing lawns on the weekend, great. Put everything that's coming in as a positive income number in that column. The second one, expenses. This is probably the one that is the easiest for us to manipulate and change. Things like your rent, your food, your utilities, your gym memberships, your magazine subscriptions, clothes, gas, food, car, all of that stuff. And don't be cheap. You don't go, oh, well, I didn't drive my car a lot this month, so I'll use a lower number. Use a real number that you say, this is about my average every month. And write all of those numbers down and tabulate that column. The final one is probably the most dangerous, and you and I talked about this last time on how we are putting ourselves in a worse debt situation as Americans because we consume. That's what we do. Yeah. Write down everything that you have a recurring debt payment. What I mean by that is your student loans, maybe credit cards, you've got a loan for your vehicle, whatever that is. And that column is going to be a little bit different, that debt column. What I want you to do is I want you to itemize everything there. I want you to make a row for every credit card or student loan or not mortgage payment. You guys can put mortgage payment in there. Put a line item for each one of those, and I want you to write the amount that's on that, like how much you have left to pay. And I want you to write down another one, which is the rate at which you have to pay, the interest charge. So for example, you have a 20% credit card or 7%. Those are really important as we talk further about how to grow wealth. And then, of course, how much you're paying each month on all of those. Once you have all of that written down, you now have the formula to grow your wealth. And we can dive deeper into that. And I'll show some examples here, but I want to make sure that, Josh, do you have any questions on this formula so far?
No, but that's an interesting thing. You mentioned the interest, what is the interest you're paying? People don't put that into context of what is on top of their debt.
Right.
It's amazing. It's amazing how that's just one of those, that's the 8th wonder of the world is compounding. But when you're paying that every month, that's another expense.
It's the 9th wonder of the world as far as why Visa and MasterCard stocks have gone almost parabolic for year after year after year, because people are carrying balances with, let's say a 20% interest rate.
Yeah.
My goodness, 20% interest rate, you'll never get out from underneath that. You'll be paying the minimum until you're dead.
Yep.
So let me give you a real quick visual example. I'll share my screen here so you guys can see some numbers. And I've thrown together an example of what we want to look for. And let me be clear. The first example is what I would say is probably indicative of most Americans. It's a negative number at the end of all of it because they just don't follow their spending. Most people don't know whether at the end of the month, after all of that expending expenses and debt and income is factored in, do you actually have money left over at the end of the month?
Yeah, that's that
That is
paycheck to paycheck.
right. And, you know, and that's what's been really crazy about this whole COVID thing is a lot of people have now all of a sudden lost their main income, are now relying on unemployment. And this whole equation has now changed. So you may have had a positive number, you know, back in January, but all of a sudden, now that you're only making $1,000 a week on unemployment, oh, well, now all of a sudden you're running negative. And of course, you know, everyone's numbers will be different, but I encourage all of you as your homework, as soon as you watch this or listen to this, write these numbers down. It will be the most basic step you can do to grow your wealth. So let me share a screen with you here, and I will walk you through the basics of this. Here's just a simple example, guys. Let's say that this individual, after taxes, not pre-taxes, but after taxes, has a salary of, let's say, $300 or $3,000. Okay, so all in all, they're making $36,000 a year, but $3,000 a month. Now, under the expenses, I tried to keep it very broad. Of course, this could be much more detailed, but let's say they spend $1,400 a month on rent, $600 a month on food. You have $300 on utilities and car payment, $100 for phone, $100 for gas, and let's say $300 for clothes. Just with those expenses, this individual is already losing money because that's $3,100 a month in expenses and $3,000 worth of income. This individual will never grow their wealth. They will continue to dig a hole deeper and deeper until ultimately they'll probably have to file for bankruptcy at some point. That's what we don't want to have happen.
Yeah.
Now you factor in the debt, and you know, some of you might have a lot more debt than this. I tried to use a small example so we don't you know, make it too gloomy. But this individual, let's say they have two credit cards. One has a $5,000 limit at 19% interest, and that would make a $200 a month payment. The second credit card is $2,000 a month at 7% interest. So that all told is $280 a month in payments. This individual is losing $380 per month. They are every month going deeper and deeper into the hole because of this equation, this formula that they put themselves in. It's not like this was handed to them. They built this position, right? They choose to spend this much money on food, and they choose to carry these credit card balances. Now, we'll talk about the simple ways to accelerate wealth, but I think right away, anybody listening or watching right now realizes that one of three things need to have happen. Either the salary increases by $380 to make this number zero, or we have to start cutting some expenses and debt, right?
Exactly, yeah.
So I'm going to make three simple changes, three very simple changes, and I'll show you the highlighted pieces here. We've simply cut the food expenditure from $600 a month to $400 a month. So instead of eating out all night and going out to fancy restaurants, maybe you decide to, hey, you know what, cook at home, save yourself a few bucks there. Instead of paying that cable bill so I can get, 780,000 channels of useless TV that I'll never use, I'm going to switch over and just get a nice high-speed internet connection or use my internet connection and stream everything. That cuts my utilities by $100 a month. And instead of going out and getting that new Versace jacket and fancy clothes, you know what? I might wear clothes for a couple of years and they're still not going to go out of style. I went from $300 to $100. Notice now that this equation has changed. Instead of $3,100 a month in expenses, it's $2,600. Now the credit card stuff has stayed the same, but now this individual has $120 extra at the end of every month. This is the first step in building wealth. Now, as we start to grow our wealth, I mean, obviously we want to make sure this number is positive. That's step number one. Once we finish with step number one, the question becomes, ooh, now I have $120 a month. Do I go out and buy some new clothes? Absolutely not. You go and you start.
That's what they're thinking.
I have money to spend. Let me go spend some more. No, that's the wrong thing. If you look at this picture here, this is a common mistake a lot of people make in the growth of their wealth is looking at their debt. In this example, we have two credit cards, one with $2,000 that has a 7% interest and one that's $5,000 with a 19% interest. A lot of people will say, hey, you know what? I want to pay off the $2,000 one first just so it's not there anymore. Why? It's 7% interest. That $5,000 credit card is charging you $19. Yep. So your number one goal with this every $120 extra is going to be to pay down that credit card debt of $5,000 and get it to zero. Whichever balance has the highest interest rate charged to you, pay that off first. And let's say, for example, you finally do pay off this credit card, this $5,000 credit card, and now all of a sudden you say, I have an extra $200 in my account every month. Well, that $320, what are you going to do with it? No more clothes, no extra gas. You're going to go and take that $320, pay down this $2,000 credit card. So all of a sudden that is gone. And now you're looking at $400 a month that you can now invest and grow in the financial markets. But you have to get out from underneath all that debt first. All right, long-winded without letting you talk, Josh. Sorry about that.
No, that's awesome. That's the key thing, and the key word there is to be able to save, right? Because if you don't save anything, you can't build anything. Right. And like the big thing, I know you did a show a while back on how to lower credit card debt and all that stuff. But the key is to lower that interest rate, because that's the thing that's hurting a lot of people. I mean, that 20%, who wants to pay 20? Is this the 80s, right? So, and there's no, and that's, you mentioned another key thing too, is using the financial markets with that extra money. And that's the key that most people don't understand, is people think, okay, I'm going to go and spend the rest of what I have and have some fun, what do they call it? Live their best life.
Right.
But, what do you think, other than that, is there any other common mistakes people make in building wealth other than these credit card interest rates and just not saving?
Yeah, there's definitely other mistakes they make. I think one of the ones that kind of puts people deeper into the hole is believing that the financial markets are some sort of, a slot machine that basically you just pull the handle and you're getting paid. And that's a pretty false misconception. I've been trading and investing for the better part of the last 24 years. And, I've had my ups, I've had my downs, and your goal is to hopefully have those ups bigger than the down years. But it's never going to be this direct linear process to growing your wealth. One of the things you have to do in the wealth building process, just like I would recommend if I'm teaching a trading or investing class, is you want to make sure that your opportunities are always there. And if you are in an opportunity that's going against you, that you put a stop loss on it. And investing and growing your wealth should be no different. We will always be presented with opportunities and where we can put our capital to get a greater rate of return, to grow this and maybe compound it more. But we have to be ready for those things not working for us. And I think a lot of people will take on debt. They might take out a home equity line of credit and all of a sudden say, hey, I'm going to throw that in the stock market because I can get 10% rate of return. And this loan is only costing me 5%. So I'll make 5% gain. That is a stupid thing to do. Bottom line is you shouldn't be paying for investing your debt in the equity markets. That is just doubling the risk and putting yourself in a precarious position. If we were to build a pyramid of wealth building, number one is simply, let's make sure we do a personal financial calculator and understand where we stand, which is why I asked everyone to bust out a piece of paper and put 3 columns on it. It's very simple. This process doesn't take me hours to do. It could literally be done in about 15 minutes.
It's simple math.
It's simple math. And we have to be honest with ourselves. And that's step one, is saying, how much disposable income do I have at the end of each month? Next step is, okay, now that number is positive. If it's not positive, there's no need to go to step 2, right?
Yep.
Step 2 is, what can I do with that positive cash flow now and pay down that debt? Once you're debt free, now you're saying I have all this much more money. As you saw, once you start to pay off those credit cards and loans, your end of the month capital, your disposable income, is going to grow. So now in this case, this individual has $400 extra a month. Now it's a step of, all right, now I might take that $400 a month and start putting that into an investment account. And certainly, if you are getting the financial markets, make sure you learn and understand them. But now, instead of paying someone else interest, get to the point where you're being paid interest. Maybe you're using an option strategy where you sell options and you start collecting premium, which in some cases can be rather low risk. Maybe you just put it into CDs, which is not going to really make you much money. That's not going to get you rich unless you're a billionaire already. But maybe you start looking at the equity markets or futures or Forex. All of these have varying degrees of risk and reward, but at least you're in a position now where you're not riddled with debt. You're not building yourself deeper into bankruptcy potential by losing money every month. You now have positive cash flow, and we can now get to step 3, which is getting the financial markets and growing that wealth through different investments.
Yeah, it's those 3 steps, and I think a lot of people get stuck at one. They're behind, and then they say, "Oh, well, this person is in the same boat," so then they compare themselves and they don't work harder to go to step 2. But you kind of opened up a can of worms there, because this individual with this illustration, let's just say they had $400 extra per month. Mm-hmm. That's not going to do a whole lot in the stock market.
No.
But there's leveraged assets out there that people can utilize, because a lot of people think that you need a lot to create certain, returns in the market. Well, there's leveraged assets. You have buying power. An investor can utilize a smaller amount of capital because the broker requires less, right? So explain what individual might be able to utilize in these other assets. You mentioned options. You have the futures in the Forex market. How could they utilize that smaller amount of capital?
Yeah, leverage is a great tool. It's a very dangerous tool for those that don't know how to use it. So, before everyone starts running out and saying, "Oh, I'm going to put my $300, $400, $500 a month into a spot Forex account where I get 50-to-1 leverage," really need to educate yourself and understand how these vehicles work. I don't want to encourage people to run out there and be jumping into these assets, because just as easily as that 50-to-1 leverage can make you money, it can blow your account like that too. Yep. And one of the cornerstones that we teach is basically money management. I mean, it's money management, it's position sizing, it's risk reward all the time. And in 100% of the cases, it has to be that priority. So, you could be looking at the options market, which many places will let you open an account with not much money, maybe under a couple $1,000s. With the spot Forex markets, which is currencies like the euro, the dollar, the yen, the pound. Yep. This is a phenomenal market. It trades 24 hours a day. Almost, we'll call it 5.5 days a week. It's closed on Saturday and half a Sunday. It's a great market to be trading in, some phenomenal trends. Again, it's always moving. It does have some risks involved with it as well, but you could open an account there with just a few $100s.
Yeah.
My recommendation would be obviously to get an education in whatever it is that you'd like to learn first, learn a strategy and tactic, and then take that money and slowly start to grow it. I would myself, I would focus on the equity markets first, because so many of these instruments that you talked about, futures and Forex options, are derived from equities. And when I say equities, I'm talking stocks. Your Apple, your Netflix, your Microsoft, your Google, all these, Amazon, those are equity markets. And while looking at some of these stocks over $2,000 a share might be out of your league, you can find places where you can buy fractional. But you want to learn how those move first. Understand the basics and mechanics of how stocks move, the importance of trends, zoning process, how to identify supply zones or demand zones and map those out so that we can start to build strategies around it. A lot of people, these Robinhood idiots that are just buying whatever's the top moving stock on the day, those fools are going to just lose their money eventually. They're killing it right now. This is one of the best things about the markets is it will lure people in with unrealistic gains. So some of these Robinhood morons, are making 300% rate of return over the past couple of weeks because they're buying the most crazy stocks that were bankrupt, and all of a sudden it got a pop because no one else is buying them, but the Robinhood traders aren't, and it jacks it up. So they will get burned eventually. They don't know what they're doing. Yep. What I'm doing and what I'm teaching in classes is I'm saying, look, here's an area where I believe there's a high probability of price moving either up or down. And it's not guaranteed. It's just giving me odds in my favor. Same thing Vegas would do, right? Vegas exists because the house runs the odds. In this case, our job is to be the house and run the odds in our favor. If something looks like a 50-50 trade, I don't care. I'm not interested in a 50-50 trade. I want to get it to the point where it's 60-40 in my favor. And I'll take those every single time that I see them, because over the long run, if I position my stop loss appropriately and my target appropriately, I will make money hand over fist over the course of time and just sheer probability. So to me, that's one of the most important things. A lot of people feel you can just buy anything and you make a bunch of money in the markets. Look, we're going to have another crash here. There's going to be a colossal crash as this debt bubble crashes, the housing market pops, the stock market bubble pops. When those three things collapse, especially if they happen at the same time, you better look out below and be capitalizing on this by going short, which is making money when markets drop.
Yeah, that's the key. I mean, it's going to be an opportunity is what it's going to be for the people that know what they're doing. And really all it is the people that don't know what they're doing, they buy and hold or buy and hope. And like that's the Robinhood reference you made. They're holding for the long haul. Well, eventually when the market goes down, they're going to lose what they have. And then that's when they're going to get out. And that's the psychology of trading and investing.
It is. It's kind of embarrassing. If you look at one of the hot stocks right now, it's Nikola, right? NKLA. And, this stock was $3-4 stock, and all of a sudden, boom, it's up in the $60, $70, $80 range. And if you look at the number of Robinhood account holders that hold this position, it's perfectly synced. So basically, you can look at it and say, the Robinhood traders who basically said, ooh, this is the next Tesla, right? It's got Nikola. It's Nikola Tesla. It's the same. Mm-hmm. If Nikola Tesla had a middle name, it probably should be a company. Unfortunately, it doesn't have a middle name. But the Robinhood traders, pump this thing up. That stock is now dropped. The Robinhood investors peaked at about $75 is when you saw that the number of accounts at Robinhood spike and and then start to turn. It dropped down to about $42 yesterday. So in a period of 4 or 5 days, it dropped from 75 down to 40. And notice what didn't change? The number of people selling in the Robinhood accounts. They're still holding it, going, it's going to go to 100. No, guys, it's going to go down to 20. Good luck. Bye-bye.
Moon, right?
Yeah. Thanks for playing.
Exactly. Yeah. Yeah. With, what do you think with the fundamental information that's going on with COVID and everything? We're seeing cases going up, the testing and the positive cases going up, but the good thing is the deaths aren't going up right now.
Yeah.
Now, do you think if that shifts, and that, hopefully that doesn't happen, but do you think if there's a shift there with the deaths with that, do you think that's going to impact the markets or cause that, another potential drop?
I think it's the opposite. I think that would actually help prevent another drop. Look, I'm not a doctor, but I've been reading up a lot of the information. Of course, who knows what information if I'm getting is even real. Mm-hmm. I've got a really weird, jaded opinion about the whole COVID thing. And if you go back, let's go back 1 year. I'm going to ask you a question, Josh. Let's go back 1 year, and it's now July of 2019. And you start developing a cough, you're coughing, your nose is running, you got a little bit of a fever, you got a headache. What do?
Well, I stay home and do nothing.
Stay home and do nothing, right? Because what would you tell yourself you have?
The flu.
You got the flu, right? Mm-hmm. I'm 100% with you, man. I wouldn't have gone to the doctor. I wouldn't have gone to the hospital. So a year ago, I would have said, I have the flu.
Yep.
I'll tell you what, in December, I was really sick. I was coughing for 2 weeks. I didn't have the fever, but man, I had the worst intense headaches. I had night sweats. It was awful. And I said, I have the flu. Yeah. What's interesting is this all started in December. And I'm willing to bet you that if we went back into 2019 or 18 or 17 and we knew what COVID was and people went to the doctor back then, we would have seen it. Yeah. It's just because we've identified it now, all of a sudden everybody has COVID now. It's not even the flu anymore. We would have diagnosed it as flu years ago.
Yeah, and sorry, go ahead. Keep going.
Go ahead.
Well, the downfall now is we get the sniffles. Oh, I got it. I got to go. Right. And that's what everybody's doing, and that's probably why we're seeing the spike in cases too.
Exactly. So, the really good news about this is that the death count is very low. And, I apologize if this comes across as crass, but if you look at the average life expectancy in the United States, it's between 74, 76 years of age. And the vast majority of people who are dying from COVID are 80 plus.
Yeah.
I'm sorry, they weren't supposed to be here anyway. No, I'm kidding. But if you look at life expectancy, the probability was higher that they would pass on anyway. And of course, this is helping, not helping, it's the wrong word to use, but this is causing that to happen. So it's starting to look more and more like, hey, you know what, this is just the flu, maybe a bit nastier. Mm-hmm. I think we need to be careful of our own personal health. And I'm exercising every day. I'm eating properly, trying to get a lot of sleep. And as one doctor says, make sure you don't drink a lot of alcohol, which is a tough one. I do enjoy a nice glass of whiskey every now and again.
Oh yeah, you gotta have that.
But if this passes and turns into just, you know what, it's really just the flu. If you have a pre-existing condition or you have immune system problems, it might be more dangerous. But for most people, that's not the case. If this passes like that, then all of a sudden these markets are going to go absolutely ballistic. S&P 4,000, no problem whatsoever, because the Fed is pumped in, or Fed and governments, you're looking at $7 trillion since February. That's a huge catalyst to let these markets rip to the upside. I'm just one of those believers that it's too good to be true. And we have that much capital pouring in, it creates a bubble, and that could come, it will at some point come crashing back down. So I'm happy that COVID seems to be not as big of an issue as everyone is making it seem. Mm-hmm. I just want to stop wearing my mask all the time and go out and have a beer in a nice restaurant, but can't even do that out here in California anymore.
Yeah, you guys are having rough over there. And it kind of goes back to what you mentioned earlier, understanding where supply is coming into the markets, where demand is coming into the markets, where the buyers and sellers are coming in. That way, it doesn't matter what's happening fundamentally, because the price is going to do what it's going to do anyway. So that's why it's important to understand that stuff. That way you're making proper decisions in these financial markets. So that way, you were talking about wealth earlier. Hopefully you have more than one source to build that wealth, because that way you can utilize that potentially to build the wealth on top of what you're making. If you're starting to save, that just amplifies it.
Yeah, and there's lots of, again, we talked about the layers of that pyramid. Number one, obviously, is making sure you have your own personal debt under control. And if you have a positive number, move to step 2, which is let's pay down debt. Step 3 is you pay down your debt. Now you start to look at different ways to grow your wealth. Now is the exciting part. Honestly, you get to step 3 and higher. That's the fun part is saying, look, I want to be involved in these markets. I love options. I love futures. I love Forex. I like stock markets, all those things. And then saying, which tool do I utilize for whatever market environment that we're in that's going to give me the best rate of return? So instead of me paying 20% on a credit card a year, I might be looking at trying to make 30% on this account in a year, which would exceed market expectations. But now I can do that with strategy behind it, with purpose, and not feel like I'm pressured to change my life. My life is already set because I've taken care of my income, my expenses, and my debt. I've got all that cleared out. Now I can really focus on the apex of that pyramid, which is really the apex of that pyramid is when you build those accounts up so high that you really just put yourself in extremely low risk investments, and the interest payments just basically pay for your lifestyle through however long you want it to be. That's a lofty goal. It takes a long time to get there. Where you're talking, you got $10 million accounts or something, and you're just, getting yourself 3% per year. And you're like, great, I'm making $300,000 a year for doing nothing. Great. But that's obviously the apex. We have to take baby steps to get there. And, the sad part is most people that are watching this right now are probably at step one and have a negative cash flow at the end of the month. I'm hoping more have positive cash flow, but you need to identify that first. You have to take that step. Years ago, it was a couple years back, I was doing some classes on this, and I read all these statistics that were just jaw-dropping. Like, the average American has something like $10,000 saved for retirement.
Yeah.
$10,000 saved for retirement? I mean, I know people whose budgets for a month are $10,000. You think that's going to last you? You retire at 65 and a half and you make it to 75, which is life expectancy. That's 10 years. But people are living way longer than. What if you live to 95? You have to stretch that $10,000 for 30 years. Mm-hmm. Good luck, man. I don't know how people are going to do it. I mean, we have to take a deep look internally and say, I want to live a lot longer than life expectancy. I'm enjoying, even though we have all this weird stuff going on Earth right now, and COVID and bizarreness going on in our political scenes, whichever side of the aisle you're on, who cares? Life is great. We're here. Let's do the most and enjoy it while we can. But I have to look down the road, because Social Security is a Ponzi scam. It won't be there. I don't trust my government to take care of me, right? Right now we're getting all these like $1,200 bailouts. You guys all get your checks for $1,200. Great. Corporations are getting billions of dollars, but you're getting $1,200. Congratulations. Start a corporation and go that route. They're not going to take care of you. So we have to be proactive and say, I have to control my financial future. Make that pyramid, start at step one, and then slowly work your way up, get the education in the markets, and hopefully you get to the apex where it's just gravy and you can do whatever the heck you want.
Yeah, that's why it's important to start early. Too many people start too late. And the good thing is a lot of people think when they get to their 40s or maybe 50s or even 60s, they think, oh, my life is over. You're still in the third quarter. You have a long way to go. And that's when you want to spend, that's when you want to travel. That's when you have the time to go do things. So that's why it's important to start early, build that wealth. That way you can reach those golden years. So
I almost want to correct you on that one. You said, when you reach your 60s, you want to travel. Look, by the time you're 60s, you got knee problems, you got back problems, your foot's all swollen. You don't want to be traveling. I would say the sooner you start, the more you can realistically plan your future. And you should be traveling in your 30s. You should be traveling in your 40s. You should be traveling in your 50s, because the bottom line is this, and not to sound mean, but I mean, we could all die. I could die while having this interview right now. I don't know when my ticket's going to get punched. I hope I live a long, long time. You should do whatever you can to have the experiences that you want in life. So I would earmark some of this money as you build it. Say, look, once a year, I'm going to treat myself to a nice vacation, but it should be planned out. And you earmark, let's say, $2,000 or $3,000, whatever the amount of money you want to allocate to it. But enjoy your life. You should not be working to live. That's just a bad way to go about it. We should be enjoying our life along the way. And certainly, all of us are trying to put in 40-hour weeks, but we got to take time out for ourselves and enjoy our time here. Obviously, my goal is to make myself rich, but in the process, many of us are making our employers rich. That's okay. You need to figure out ways to make yourself rich at a growing, an escalated pace. And unless you're looking at investments or multiple sources of income coming in and developing, those kind of side gigs, you're probably not going to get to that wealthy point. Just because you have $200 extra at the end of every month, that's probably not going to get you rich. It's what you do with that money that helps get you rich. And of course, it's not going to happen by the end of next year. It's a process. It could take many years to get there, which goes to your point of start early. I was very fortunate. I started at 25, and I guess that's one of the ideal times to start. So I was very lucky.
Yeah, I'm glad you gave some more context on that, because that's the psychology, or that's how the public thinks, is they have to wait until they get old to do that stuff.
No,
So,
do it now, man. I mean, look, like I say, I got a friend of mine. He's got a bum knee. He can barely walk, and he's 52. It's like,
yeah.
well, that guy's not traveling. He's not going to go visit Pompeii or go to Thailand. He's like, I'm sitting on a couch. I'm like, okay, well, you have different needs. I want to go and explore the world, and I want to make sure that I do that while I'm healthy. And we know the older we get, the more likely there's going to be some health problems along the way.
Yep, most likely. Well, I appreciate your insights today, Merlin. And I know you got a live show to prepare for, the Trader Merlin show. You can find that on YouTube. Trader Merlin? Is that what it's called?
Yep, just go to YouTube, type in Trader Merlin, and we do it live every day at 2 p.m. Pacific time.
Got it. Appreciate your insights, and hopefully we can have you on again. But that's really good, this context and the insight on how people can generate wealth, because I don't think a lot of people have that down. It's just a couple steps. And if people put those steps, start with step 1, step 2, step 3, hopefully they can reach the goals that they have in their financial situation.
Everybody can do it. That's the truth of this, is everybody can do it. But I think there's a phrase that I love to use in the trading and education business, which is most people just don't know what they don't know.
Yeah.
And, I look at the simplicity of what we talked about today. It's 3 numbers, guys. It's income, how much you got coming in. Look, if you're selling illegal drugs, put it down on income. I don't care. This is your personal numbers. It doesn't make no difference, right? Income, take away your expenses, take away that debt, and then find out where you stand. And then ultimately you want to get down to debt 0, right? Debt free is the best case scenario. And then from there you build. But it's very easy if you just take it step by step and don't rush the process. Just understand where you are in the process and follow the steps and rules, and you'll get there.
Awesome. That's great stuff. Also, don't forget to subscribe to Merlin's podcast on Apple Podcasts, probably anywhere you can hear podcasts.
Yep.
The YouTube. Also, don't forget to subscribe to my podcast, Josh Lilquist, and the Retire Young podcast on Apple Podcasts, iHeartRadio, and Spotify. So thanks a lot, Merlin, for coming on. I know you got a big day, and hopefully we'll have you again.
Awesome, Josh. Looking forward to the next time. Thank you.
All right. Thanks a lot.
All right. Take care.